Well, let's get reaction to those gross domestic product numbers that were released just minutes ago, 4 minutes ago to be exact. Once again, fourth quarter gross domestic product growth comes in at an annualized pace of 2.6% growth. Economists were expecting something almost a full percentage point short of that. The November reading the third quarter reading has been revised up to 2.2% from the initial 1%. Let's go to our expert guest. Pierre Cleroux is chief economist at the Business Development Bank of Canada, and Lenka Martinek, our featured guest, will join us in this conversation as well. Pierre, thanks a lot for joining us. What's your take on these numbers? Much stronger gross domestic product growth than we were expecting, both in the fourth quarter and now the third quarter as well.
Well, we're all a bit surprised. The numbers are very good. This is the impact of lower interest rate. We can see that in the fourth quarter, we saw the positive impact of lower interest rates. So consumption is increasing, real estate investment is increasing as well, even business investment. So this is a good news. It means that the Canadian economy is performing very well. But of course, this is before the uncertainty that we have right now around the tariff. So the first quarter of 2025 will be probably lower than that.
Lenka, I know you want to participate in our conversation. What's your question to Pierre?
Yeah, so my principal concern actually is around the inflation and basically the environment in which the Bank of Canada will be able to continue on a rate decreasing path if we do get some of these tariff headwinds. So could you perhaps just speak to how much room you think that the Bank of Canada has in order to sort of navigate the tariff environment, given where we are in inflation and what that will do to the inflation environment?
I'm not too concerned because inflation is at 1.9% in Canada, and it has been around 2% for the last 6 months. So we're back to price stability in Canada. So there's no reason for the Bank of Canada to keep interest rate higher than what it should be. So we are still expecting that the bank will reduce its rate in the next announcement. And in the next few months, we should have a policy rate around 2.5% next summer.
I'm looking at the table that StatsCan has released, Pierre, on which sectors of the economy grew the most. The outliers are really utilities. Utilities, gross domestic product there grew by 4.7% in the month of December. These are December changes. And in terms of services, it was retail trade up about 2.6%. Why are those the big growth areas in Canada?
Well, you know, utilities and typically these numbers fluctuate a lot from one quarter to another. So I'm not too, what is important in these numbers, the fact that consumption has been very strong. The residential construction is increasing, which is expected with lower interest rate. And export is also very strong, which we expected. What surprised me is business investment is actually doing better than what we expected.
The Canadian dollar is rallying on this news. It's getting stronger. It's now trading at 69.4 cents. It's before this news was released, it was trading at about 69.3 cents. So it's not a huge move, but it is moving higher. That looks like a move based on the likelihood that the Bank of Canada may not have to cut as aggressively. What's your take on the currency market's reaction to this news?
Well, really, it's good news for the dollar, but what will keep the dollar moving is the announcement on the tariff. We are expecting an announcement next week, next Tuesday. So I think the dollar is going to remain low until next week. And if the tariff are postponed again, well, that would give some break to the dollar. But the dollar right now is really reacting to the possible tariff on the Canadian economy.
Okay, Lenka, last question to you.
Well, I mean, any forecast on what's going to happen next week with the tariffs? I think that's the main thing for Canadian markets right now. Any crystal ball?
Okay, we'll leave it there. Pierre, thank you so much for joining us today. Pierre Cleroux is chief economist at the Business Development Bank of Canada. We're grateful for his instant analysis of some pretty dramatic gross domestic product numbers here in Canada. The economy growing much more rapidly than economists are expecting. Pierre says that's a reaction to lower interest rates.